How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 27 to the Asian Session Library. Here on Thursday, the 18th, January 2024, we had another successful Asian Session model with the pair US dollar versus Japanese yen. Today, we're going to reverse engineer to how we got to 15 pips of take profit. How was this a successful trade? So as you can see, price comes down and gives us a 15 pip TP, and we are ecstatic because that's all we're looking for. That's the ideal pip range I want to acquire every time I'm trading between 8 p.m. to 12 a.m. midnight. Here we can see a fair value gap forms before we took that entry. You can see that fair value gap, in more specific terms, runs through a swing low right here. So what makes this a swing low? Well, the candle on the left has a higher low and the candle on the right has a higher low. So this is the lowest point between two candles. So that makes that swing low formation. The fair value gap runs through it. And that's where we can see we got our entry point at. We do see that there is a fair value gap that is above it, which was my older entry technique. And I don't prefer that, but we can see at times it does perform and give a good realistic entry as well. You can even see there's a BPR. Some people may see that as well. Balanced price range here. But all in all, this is the entry technique that I'm looking for. If you look back all the episodes, right, go back to 26, 25, 24, 23, and so on and so forth, you'll see that this is the same exact entry. I'm looking for that. Now, what happens prior to this forming? Well, let's take a look. We can see price comes up and breaks what? 15-minute swing highs that form in the late New York session. So the New York lunch session, the dead zone, these are all 15-minute swing highs that are broken and rated. We had one rated here, one rated here, and one rated here. Now, question is, when one is rated, am I looking to go short immediately? No. If two is rated, do I look to go short immediately? No. If three, four, and so on, it doesn't matter how many is rated. I have to be stalking this entry technique. Once this forms, then I pull the trigger. It could have formed down here, right? A little closer to the open, but right after breaking this without breaking the second level. Or it could have formed after breaking the second level. Or it could have formed after breaking the third level. And it did. It broke this 15-minute swing high. Then this one formed. All in all, we are just attentive to the price action after sweeping buy side liquidity because we're looking for that turtle soup opportunity. We're trying to be counterparty to those that are looking to break out and go long. And we're able to achieve something here. We're able to achieve that little sell opportunity there. And if we go back down to the 15-minute time frame, just to observe what it looks like, that one there, do that one there, right? We even have another one here as well. It's just above it. You see that? But multiple swing highs have been broken going into the session. So when we play it forward, this is what it looks like, right? It goes up, it takes out the buy side liquidity. We're looking for it to at least revert back down to the open or even the sell side liquidity below that swing low. So price getting down here and returning to the sell side liquidity would be a real, successful trading model. But at times it doesn't give us that. We know that we have to not be greedy. We take off what we can. So 10, 15 pips, we're good for the day. We're good for this session. We don't have to look for more after that. Now, if price does continue to break down, that's sweet. That's just a cherry on top. We're able to get a trailing stop potentially, and our trailing stop tends to hold really well, doesn't get ran out, and then we can continue to take in more profit as the price continues to go lower. But at times it doesn't do that. And at times it does. And we've noticed that mainly on Tuesdays and Thursdays. And sometimes on the other days, like maybe even a Monday, maybe even a Wednesday. But mainly Tuesdays and Thursdays, we see it continue to trend lower than 15 pips. If you go back to the 1 minute time frame, we can see it does give us just about a little more than 15 pips as well. So it comes back down and it gives us about 20 max before turning back around for the rest of the session. So it never got back down to the Asian Open, which is why we always like to pay the trader, because we don't know if the direction of the market is going to change or if it's going to continue to uphold where it wants to go. It didn't continue to uphold where it wanted to go. right? It could still be following the higher time frame premise for UJ because we know dollar in recent time has been bullish since the beginning of the year. So UJ, UCAD, USWISSY have all been bullish as well. So it could still be following that higher time frame trend. And that's why we pay ourselves here. We pay ourselves that 15, that 20, and then if we get lucky, we get that trailing stop. All in all, this model is very simplistic. We don't try to overanalyze what's going on during the session. We keep it cookie cutter like. This model you can write on the back of a business card, each step, right? Step one, mark out your buy side and sell side liquidity pool in New York lunch session. Step two, wait for one side of the market to be rated, whether that's buy side or sell side. Step three, wait for a fair value gap to form relative to the idea and direction above midnight, above Asian session open or below Asian session open with a fair value gap running through a swing point, take your entry. I can write all that on the back of a business card. That's how simple the model is. And for those that are full-time employees, in whatever field you have, especially if you live in the States, in the United States or America, you may not have the opportunity to trade London and New York. And this might be something that's supplemental for you to do after you get home from work, instead of just sitting on your phone, doom scrolling through Instagram, doom scrolling through YouTube shorts, or whatever it is that you do that is, less productive, and you're trying to beat inflation and you're trying to provide for yourself and, sustain a level of income to tap into a new barrier. This could be something that you could do part-time outside of your job. And I don't know where you live in the world. I know I have a lot of viewers all around globally, but this could be something that can be used very short term, very minimal goals. You're not aiming for the stars. You're just trying to take what you can. This is what I can take every couple days. Monday, Tuesday, Wednesday, Thursday. If I can get 15 pips or even more sometimes, or even just 10, I'm happy with that. I can move on. I'm not looking for the big winners of 100 pips, 200 pips, 300 pips, because slowly compounding, the small wins add up. Hopefully this was insightful. Peace.